Do you think Bitcoin is in any way tied to the equity market? In other words, if Bitcoin does fall further, would it negatively impact stocks, or do you think they are separate things and separate investors and separate people?
I think what's most interesting along that vein is it's the first sign of greed since the Great Recession. If you really think about it, you know, investors wanted to be on the roller coaster in the 90s. They wanted high returns. They didn't mind volatility. The Great Recession put the fear in a lot of folks. They wanted to go on the merry-go-round. They wanted low vol. They wanted their dividend yield. Bitcoin really represents the first sign that there's some greed in the market, that folks really want to get on that risk train. Look, are there linkages? Probably not. I mean, most folks that I talk to, if they've got a little money that they don't mind losing, you know, they'll throw it into Bitcoin. I don't think people are taking out second mortgages to buy it. If they are, then there's linkages. But I do think it's informative because it is the first real sign of greed. And I think it's indicative of rising risk appetites, which will drive equity markets higher, kind of almost regardless of what happens with Bitcoin.
What makes you so optimistic?
Earnings. I mean, in one word, earnings. Earnings estimates rose all last year, and that was based on strong underlying fundamentals. And, you know, the tax rate, I mean, I don't think any of us, or certainly not most of us, were willing to model in a tax rate as low as 20, 21%. Most folks were trying to be conservative. But when you look at pick up in economic growth, the full impact of the tax reform boosts the earnings number, and you got to pull your target up to match it.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.